News from China there. We've got the Fed reaction. You think markets, though, might be overreacting?
Well, certainly I think there was very little out of what was said last night that wasn't really said on the 22nd of May when we saw the topping in the markets. I think that we have come to expect that tapering will happen. I think what Ben Bernanke really managed to do was define the difference between tapering and tightening. And of course, we're not expecting to see any interest rate hikes until at least the end of 2014. So tapering is an inevitable sort of factor. But I do believe even if he tapers it back to, say, 80, maybe 70 billion per month, it's not going to have such a downward effect on the market, but it's just the uncertainty at the moment, I think, that has seen the aggressive sell-off. And of course, we're seeing the same effects in the European markets this morning, with the FTSE set to open 100 points lower around the 6,250 mark. So as long as you remain above the 6,200, it remains a correction. If that level fails, and we found support of that before, then it does look a little bit more problematic for the indices here in Europe.
Well, you know, the first couple of minutes of trading, we're down 1.5%, and the FTSE Euro first in Europe, and the FTSE itself 6,255 as we speak. We're getting pretty close to those levels, and it seems the pressure certainly seems to be heading downward.
Absolutely, and I think, of course, when you see the Chinese PMI data, of course, that will have a downward effect on the FTSE as well, given how weighted it is towards the mining sector. And we've seen the mining sector since like early February drop back by 25%, and it does look like there's a further downward bias attached to that particular index for the time being. So, as I said, if the 6,200 fails, then I would be looking for perhaps a drop back to the beginning of this year, around the 6,050 level, which would really just bring us back entirely from the entire rally from the beginning of January to date.
So China looking pretty ugly. We've had the big news from Bernanke in the States. Europe seems to be getting it from both sides. Yet, might we get a chink of light today from the Eurozone PMIs?
Well, certainly we've seen some improvements, and I think the German PMI data will be the one to watch today. It's been very much kind of caught in the grey area and below the 50 zone the last time we saw the results come out. So any improvement here could give the euro a little bit of a bounce. And if anything, I think the actual the data from yesterday, or the statement yesterday, was actually quite a boon for the euro, because it did look a little bit bullish for the last little while, and we saw a huge big crossover in bullish euro investors by 36% in the last week from hedge funds. So the fact that it was up at that 134, a 4-month high, was actually a bit of a problem for the eurozone in terms of the fact that it's trying to export itself out of the recession. So I think what Ben Bernanke has done will probably help the euro in the short to medium term.